Now, the report of the board, that is the board of directors, this should also contain an additional disclosure. So, the provisions of an additional disclosures were also incorporated. Now, what are those additional disclosures? CSR policy, implementation of risk management policy, the director's appointment and the remuneration policy, and also policies relating to, and also provisions relating to the related party transactions. So, all those had to be additionally disclosed by the companies. The next provision that was incorporated was that the company cannot enter into transactions or agreement with related parties unless approved by the shareholders. And this is one of the very important changes that have been brought about by the Companies Act 2013. That is, you cannot enter into transactions with related parties unless you get the approval of the shareholders. The other most important provision that was incorporated under Companies Act 2013 was that regarding to insider trading. The insider trading is prohibited, and in case there are violations, then punishment shall be imposed if the persons are involved in insider trading. Another very, very important provision that has been incorporated under Companies Act 2013 is provisions for class action suits. Now, these class action suits, they empower the minority shareholders to seek action against mismanagement. Now, all these changes were incorporated in the Companies Act 2013. The class action suits, the related party transactions, the insider trading, new provisions were introduced in Companies Act 2013. Keeping in this, the SEBI also modified its listing agreement. Now, as per the SEBI's new listing agreement, that is clause 49, the board of directors should comprise of both executive and non-executive directors, but non-executive directors should not be less than 50% of the full strength of the board. So, the chairman will be a non-executive in case if the board of directors will have at least 1/3 independent directors, and the chairman would be an executive directors if the board will have at least 1/3, half of independent directors. Then the compensation of fees paid to the non-executive directors, including independent directors, shall be fixed by the board of directors with the previous approval of the shareholders in the general meeting. The other requirement was the related party transactions, that is, the disclosure of all the transactions with related parties had to be undertaken by the companies. Then the annual report should also contain a management discussion and analysis regarding the company's competitive position. The shareholders had also to be given information regarding the appointment, reappointment or remuneration of the directors, and also the companies had to provide a certificate stating that financial statements had to be reviewed by the chief executive officer, and that the financial statements have been reviewed by the chief executive officer and chief financial officer, and every quarter a compliance report had to be filed, and these compliance certificate and these compliance report had to be certified either by a auditor or the practicing company secretary. And further, the annual operating plans and budgets, they are also required to be filed in the companies. So now we have looked at the provisions of the corporate governance under Companies Act 2013. Now, let us look at certain corporate governance practices in the Indian companies. Now, for example, in the case of ITC, the four principles of corporate governance which they believe in are trusteeship, empowerment, accountability and control, and ethical corporate ethical corporate sustainability. Then in the case of Maruti Suzuki, it considers itself to be a conscious and vigilant organizations. The company has initiated good governance practices and it forms an integral part of the company's culture. It has also constituted a control self-assessment mechanism which evaluates the effectiveness of its internal control over the financial years. Now, Infosys is another company which seeks to have good corporate governance practices. The company has won many awards for undertaking the best corporate governance practices in India. The company discloses to seeks to attain the company disclosure, they seek to attain the best practices of international governance standards. Then you have HCL Technologies. The company undertakes independent review of the corporate governance practices. Now, there are companies with good corporate governance practices, but there are also corporate governance failures. For example, in the case of Sahara, the Supreme Court has directed the SEBI to oversee the refund of investments that has been made by the investors through OFCDs in the two group companies, Sahara Indian Real Estate Corporation and Sahara Housing Investment Corporation. The Supreme Court has held that the SEBI could have special powers to investigate, adjudicate and protect the interest of the shareholders. Now here, the question of Sahara's corporate governance was an issue. And then you have the case of the real estate firm DLF, which was barred by SEBI for 3 years on the grounds of non-disclosure of financial details. You have another case of financial technologies which came into light for executing a number of related party transactions without the approval, or it was not in the best interest of the shareholders. Then you had the leading pharmaceutical company Ranbaxy, which is being accused of committing systemic fraud. And then you had the case of Reebok in 2012, which to a fraud of 8,700 crore. Now, the next concept which is very important is the concept of whistleblowing, which allows the reporting of malpractices or misconduct or corruption within the company, which affects the third parties. Now, there are global legislations, the Sarbanes-Oxley Act, or you have the Public Interest Disclosure Act at the international level. In India also, we have the Clause 49, which has a non-binding requirement of establishing a whistleblowers policy for all listed companies. So, in case if there are genuine concerns, you could approach the you could take the help of the mechanism and report the corrupt practices. Then section 177 clause 9 of the Companies Act allows the listed companies, makes the listed requires the listed companies to have a vigil mechanism in case of if there are they have to have a vigil mechanism which is to be operated by the audit committee or the board. So, for that a director shall be nominated who will undertake the role of the audit committee, and the whistleblower could report any unethical behavior or policies or frauds that are being committed in the company. Now, here section 177 clause 10, it provides for the safeguarding the victimization of the persons, but the anonymity of the shareholder, anonymity of the person, that is still not being given by that particular provision. That's a drawback of that particular provision. Now, this audit committee can take care, it can take action in case of any frivolous complaints, and then it is the independent director has been given a duty to ascertain whether the vigil mechanism is functioning properly or not. Now, the vigil mechanism, the details about the vigil mechanism should be displayed on the website. And now, if we see the corporate governance policies, these corporate governance policies have actually provisions that have been incorporated in the Companies Act 2013, has led and led to an improvement in the India's position in the world rankings. India is now ranked at 130 in the World Bank's doing business in the year 2016. Now, the improvement in these rankings can be linked to better governance practices that are being followed by the Indian companies. Now, the further focus on the corporate governance standards, it should not be merely as compliances, but it should be a part of the company's culture. Now, if it becomes a part of company's culture, the effectiveness of the corporate governance would increase, and this would lead it to better competition. Indian companies could withstand withstand global competition and can sustain in the long run. Thank you, all of you.